What is up, everyone? My name is Beck from MNPT Trading. I know you guys haven't seen me on the channel before, but look, now I'm here. So today we're gonna be going over supply and demand levels, key levels, the differences between them, and how you can mark them up on your charts every day so that your trading life is a lot easier. So let's just get straight to it. All right, look, so a lot of you guys may be thinking that supply and demand levels are just key levels and that, they're like the same thing. Supply and demand levels are like, I guess you would say key levels in the moment. Key levels are made the next day, which is what even makes a key level. Help you like trade in the moment. When you're trading in the charts and you're marking up like, oh, this is my support, this is my resistance, you're probably looking back at the past to find these levels out. Supply and demand zones are kind of like the support and resistance levels in the moment, which the next day will then become an official support and resistance. So but most likely you guys have been marking up your support and resistances every day when really they're just supply and demand levels. Let me just show you guys on the chart so you could get a better picture of it and just understand it a lot better. So let's go. All right, what's up, guys? So on my computer now, I'm gonna be going over what I mentioned previously: supply and demand levels and key levels. So to start things off, the demand level is right here at the bottom because as prices start to hit this level, the demand for it goes up and prices tend to shoot up because if a lot of people want something, the value of it's going to go up. So it goes up. The supply level is over here at the top because all the supply tends to go back into the market once it hits this level. The difference between this and key levels like a support and resistance is that these supply and demand levels are made currently in the moment. Right here, I already have it marked up. But to kind of make things a little easier if you don't understand is at first prices started to go up because investors were dumping a lot of money into it or some news came out and a lot of people started, buying it. It started to go down because all those investors started to sell everything. But the moment it rejected right around here, it made something called a demand level because now the demand at this specific level is set. Now, if for the rest of the day prices are reacting off of this demand level, tomorrow it's going to be an important key level that I can use. Now, let me show you guys some supply and demand levels that I made yesterday, and we're going to see if we can make them into key levels that we can use today while we trade. Right here, these are supply and demand levels that I made yesterday. Now, as you can see, the market reacted pretty nicely to them. So if I just drag these out to what's happening today, we can already start to see how these are going to be important key levels while we trade today. So look. This has given us a better idea of what's happening in the market already because look, I dragged it out and we can already see that prices were already reacting to it earlier. So now this is a key level because it's proven to us that prices are going to keep on reacting off of it. Now, tomorrow it might stop reacting to it, but that's why it'll just be a key level that we can refer to whenever we want. We don't always have to rely on key levels. Showing us how supply and demand levels are just supportive resistances that are made in the future. If it can hold up to its high standard and keep on showing us that it's a reliable key level. Before we end the video, I just want to go over one more thing. There are key levels that are stronger than others. So if we go on the 4-hour chart, whatever key levels that we set here are more likely to be rejected or acted upon once it's reached than a key level that you set on the 5-minute chart or 15-minute chart, because the higher the time frame and the more key levels you find, the more important it is because it's all of that price action shrunk into like one little time frame. So yeah, if you guys have any more questions or anything I didn't go over clearly in this video, please leave a comment down below. Once again, I'm Beck from MNPT Trading, and I will see you guys in the next video.